A very important name. Remember, this is a company that produces the equipment used to make chips, and they are getting nailed, as you can see there in today's trade. They reported investors clearly disappointed, bookings coming in lower than what the street was looking for. So now how do you think about kind of what to do with the stock here? And this is a matter of a lot of debate today on the street. There are skeptics questioning now with this report what this now means for 2025 sales. Is that at risk, they ask? On the other hand, Julie, bulls are going to point to the company's backlog. There's been also kind of more recent positive commentary from big ASML client, TSMC. They kind of sounded more recently positive, bullish about what's ahead. And of course, we're now, building new fabs in this country long term. That should be good for ASML as well. But clearly today, right now at least, the worry is winning.
Yeah, and it's interesting because what ASML makes is not just chip making equipment, but the most advanced chip making equipment.
The most cutting edge,
and
right.
And that's where the orders were particularly weak. ASML actually had relatively strong orders into China, where it's not allowed to sell
Correct.
that particularly advanced equipment. So it's still seeing that strong demand in China for the sort of not as advanced chip-making equipment. So that was sort of an interesting nuance in the report, and ASML executives seemed sort of optimistic that China demand would continue. They also said that 2024 is going to be a transition year in terms of where we are in the chip cycle. So that's something to think about as well. But keep in mind the backdrop for all of this is we're in earnings season. Tech is supposed to be where it's at. That's where the growth is supposed to come from. So is this an early sign that maybe that's going to be a disappointment? S&P off by a little more than 0.5%. Tech leading declines here today, off by about 1.2%. So we continue to watch that sell-off unfold. And to dig a little bit more into that, let's take a look at the NASDAQ 100 here, where you see Alphabet, the only of the largest of the large cap that was higher on the day. Nvidia participating in that chip-led sell-off that was really sparked by a forecast that was read as negative by the street, and an earnings per share miss, I should say, from ASML, the big chip equipment maker. And so that's spreading through a lot of tech as well.
Over the past year, semiconductor stocks have soared as companies went crazy for new AI technologies, which is shown in the performance of the PHLX Semiconductor Sector Index, which has jumped 54% over the last 12 months. Investors, just like tech companies, were super enthusiastic about AI, investing in the companies that make the powerful chips that power the technology. One of these companies is Nvidia, the AI GPU market leader. Nvidia has led the AI rally, and its shares have gone up by more than 200% over this past year, giving it the third highest market cap in the United States, after tech giants Microsoft and Apple. That's why analysts at Morningstar are bullish on Nvidia stock, despite recent headwinds. Analysts Brian Colello and Javier Vadio wrote in a recent report that the firm is seeing a historic rise in demand for AI and AI accelerators, led by Nvidia. So, why is NVDA stock one of Morningstar's favorite semiconductor bets? Let's find out. But before we do that, if you want to keep up with Nvidia's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video.
What a week for the chip sector. Intel unveiling a new AI chip to compete with Nvidia and AMD. That's a day after Taiwan Semiconductor receiving $6.6 billion from Biden's CHIP Act. Joining us right now for more on the sector is Joseph Moore, Morgan Stanley semiconductor analyst. Good morning to you. Help us make sense of all of this news, if you could, from 30,000 feet, and then let's drill into each of these companies to try to figure out where you think the real opportunity is. But given all that's going on, who is the big winner in this?
Well, ultimately, I think, we think that in AI, that NVIDIA has such a strong position that that's still our top pick in the compute space. Intel has done a good job of putting out new products. Gaudi, I think, will have a niche role in the AI space, the Gaudi 3 product that they came out with yesterday. But I think what Intel really needs is to stabilize the foundation of servers. And I think that the products that are coming out, such as Sierra Forest and Granite Rapids, I think those products are going to be critical to stabilizing that foundation. I think to the extent that you see the new AI products, we're seeing companies benchmarking against NVIDIA's H100. But NVIDIA is about to ramp Blackwell in the second half of this year. They're on an annual cadence, so they'll have new products again next year. So I think Intel has a role. I think they are an alternative to NVIDIA, but we ultimately sort of see NVIDIA as the premier way to play the AI trends.
The Morningstar analysts pointed out that in recent quarters, Nvidia has reported staggering revenue growth, raised the bar for the next quarter even higher, and then smashed through such rosy forecasts. This is why they expect the company's strong performance to continue, saying that demand for AI-related GPUs should remain strong, with the world's leading cloud computing providers and even nation-states racing to buy enough GPUs to run generative AI for themselves and their customers. They also said that this would be the case whether economic growth stays strong or weakens, so Nvidia is considered a safe stock no matter what. Aside from the company's AI potential, the analysts maintained that the non-AI landscape is a completely different story, saying that PC and smartphone chip demand is now recovering from cyclical bottoms it reached in 2022 and 2023. In my opinion, this could be a great opportunity for Nvidia, as the company unveiled new GPUs for running generative AI applications on PC from companies like Acer, Dell, and Lenovo in early January, which it says are great for gaming at max settings in the latest and greatest titles. And just like how there's a lot of opportunity for Nvidia in AI and PCs, the analysts don't think that its automotive chips will take off this year. In fact, they said that demand for these chips is the biggest question mark heading into first quarter earnings. But what does that mean? Let's find out. Hello everyone, and welcome back to Investocracy.
Dan, last week we talked a little bit about EVs and the battle between EVs and hybrids. Hybrids have been pretty fantastic because I think the difference is you have all the benefits of better fuel mileage, all of these things that are great for the economy, but the customer doesn't really.
Well, I heard you last week talk about your personal experience of hybrids.
I love it. The hybrid's great. I don't have to do anything differently.
Yeah, it does it. But it's very different. If you look at China, 35% of new cars are EVs. Europe, 24%. Although in Germany, take away the subsidies, sales go down. U.S., it's about 10%. And you had those 4,000 dealers who wrote to the White House saying, put the brakes on EVs, and what's happened is they become politicized. EVs are going to be part of the 2024 presidential campaign.
Let me ask you a hybrid question, though. And actually, it's interesting. Henry Blodgett had been on Twitter a week or two ago asking a similar question, which was, why are there not more hybrids?
Yeah,
and why not sort of reverse the scheme so that there's like a little bit of hybrid at the end, make basically an electric car with a tiny amount of hybrid rather than a gas-powered engine with like a little bit of battery. And it seems that most of the folks that are in this industry feel like it's a simplicity thing, which is to say either you're all electric, and if you want to add some distance, add an extra piece of battery, or be in the combustion engine business. But to do both is more expensive, more complicated, et cetera. Is that true?
Well, it is true. A hybrid is a more complicated car because there's two engine systems. And a couple of years ago, the embrace of EVs by the major automobile companies, they said they're simpler to build, but they've run into the consumer resistance over them. And that the system, we don't really have the charging system. And we don't have people, we're a consumer society. People were not ready to go that way.
It's the Amazon principle. Give the customer what they want.
Right. And the one company that stood out was Toyota, which said, kept saying hybrids, and everybody else was over there. And now they're done well out of it.
If you've been following the EV market, you'd know that demand isn't like how it used to be, and is now slowing down a bit. Not only that, but more people are turning to hybrids, which are gaining popularity and taking market share from EVs. The Morningstar analysts actually gave two scenarios for automotive chips. The best case scenario, auto chip growth will grind to a halt, if not fall modestly after 3+ years of great growth. The worst case scenario, on the other hand, expects the current sluggish demand for EVs to continue, driving the auto space into a terrible downturn for most of 2024 and taking down demand for automotive chips with them. Back in the GTC 2024 event, Nvidia announced a partnership with Chinese automakers like BYD and Li Auto to provide them with Nvidia's drive-through automotive chips after it integrates the new Blackwell GPU architecture into them, which would allow the chips to become strong enough to handle large AI solutions that will help with autonomous driving. So, a slowdown in the EV market could have a negative impact on Nvidia. Regardless, the analysts think Nvidia stock is better priced than most. In fact, they think that the semiconductor industry is 1% overvalued on a median price basis, but that doesn't apply to Nvidia, as the rise of AI is reasonably priced into its shares as the industry leader Nvidia, while other AI names are too pricey. It's not just Morningstar who's optimistic about Nvidia's future, as Citi and Morgan Stanley analysts also see significant upside potential, and we're going to explore that now. If you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Vivek, broaden that out to the rest of earnings season for us, because well, there's a lot of optimism that AI is already going to be helping with costs, for example.
Well, actually, the AI has been the major talking point, and the expectations are quite high, mind you. I mean, looking at the Magnificent Seven stocks, the expectations around earnings growth of around 40% for the first quarter. That's a huge number. That's still down from 55% printed a quarter earlier. But if we single out stocks like Tesla and Apple, who have been in trouble in the first quarter, well, the expectation of earnings growth goes all the way up to 80%. So now we are talking about a handful of AI stocks, namely Nvidia, Microsoft, but also Google, and we're talking about Facebook and Amazon. So I think that there is a huge optimism out there, but what we will be really interested in is who within this AI segment is going to be profiting from the AI developments, whether it's going to be the provider of AI tools, or are we going to shift towards, well, the user of the AI tools.
As of the time of this video, Nvidia stock is trading at around $840, a far cry from its 52-week high of $974. Despite this, Morgan Stanley recently revealed that it's extremely bullish on Nvidia and the company's upcoming earnings. According to Morgan Stanley, the market is poised for a potential bottoming out of earnings in Q1, followed by a sequential recovery in the second quarter and an expansion in the second half of the year. So, analysts expect Nvidia to pick up the pace later this year. As for Citi, analysts recently reaffirmed their bullish assessment of NVDA stock. In particular, Citi believes investors should be on a 90-day positive catalyst watch. The thing is, Citi is optimistic about supply chain discussions that suggest demand for Nvidia's GPUs could extend into the first half of 2025, a projection that aligns with Citi's own estimates of the GPU market. Citi analyst Atif Malik said that he expects supply chain commentary from key foundry and HBM memory suppliers during earnings and Computex Taiwan on June 2nd, where Nvidia CEO Jensen Huang will deliver a keynote, which could be positive catalysts for the stock. Citi reiterated a buy rating on Nvidia stock, along with a $1,030 price target, which is a massive 22% upside from where the stock is trading as of the time of this video. With all of this in mind, is it time to buy the dip on Nvidia stock, or is it too late for new investors to get in? In my opinion, Nvidia still has a lot of room to grow, even after it suffered some setbacks that caused its stock to fall. The company's GPUs are an integral part of training AI models, and when companies use GPUs to train AI, they don't just use one or two of them. Instead, they use thousands to increase computing power. Nvidia's flagship GPU for training AI models is the H100, which costs around $40,000 apiece. When companies purchase these GPUs by the thousands at that price, Nvidia's business booms. It'll be even better for the company when its Blackwell GPUs are released this year, because they're simply much better than the H100s and yet come at a very similar price, according to Jensen Huang. So Nvidia is competing with the rest of the market on both technology and price, and when Blackwell is made available, companies will be able to switch to the world's most powerful chip for AI without having to pay way more than what they already do. I see this as a complete win for Nvidia and something that can draw in more customers. While Nvidia's stock is up more than 70% this year, it's only up around 7% since its last earnings report. So, the company's upcoming earnings will mark a very important point in Nvidia's story for 2024, because most news that drives the stock will be released in that announcement. If past trends hold, Nvidia's fiscal Q1 results should be announced sometime in late May. And if Jensen Huang and Nvidia's management team give positive forward-looking guidance and say that it will maintain the status quo, don't be surprised if the stock gains even more. Worst-case scenario, management might discuss demand leveling out, and this would lead to a severe sell-off for Nvidia stock. Nvidia has a lot of expectations built into the stock, and one of those is strong growth for all of this year. If you take a look at the difference between Nvidia's trailing price-to-earnings ratio and its forward price-to-earnings ratio, you can calculate its expected earnings growth rate for the year, and that's around 109% for Nvidia. So, the company must at least double its earnings, or it will fall short of analyst expectations. This might seem like an impossible task to outsiders, but Nvidia investors know better. Considering that the company's EPS grew by 765% in Q4, it's certainly possible that Nvidia can double its earnings. So, to answer the big question, does Nvidia's stock have more room to grow? Absolutely. If AI demand continues to drive Nvidia's revenue higher than the expectations of the company and analysts, it could still rise a lot more. What do you think about Nvidia stock? Is it a buy at the current price? Let us know your thoughts in the comment section. And don't forget to tell us what your valuation for Nvidia is. If you would like to know what companies like Tesla and Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.